You are on the Transparent FX Academy. I'm Nick, and I'm a top potter on TradingView with over 250,000 reputation points. And what I love the most is sharing educational breakdowns that show you how you can be looking for the best trading opportunities in the market. So without further ado, let's go and see which is today's Forex pair that we need to break down. In today's video, I will be speaking about silver, and as usual, I will be speaking about it in the most educational way possible. So first, we will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what the non-commercials in the market are doing, so the biggest speculators. And by the end of the video, by using a combination of our technical and order flow analysis, we will be able to understand where we have the highest probabilities for a potential trading opportunity on this commodity. Starting here from the monthly time frame, what do we have? Now here in the monthly, we can see how the market first of all created this W formation, and generally speaking, after the creation of a W formation, you first want to see the market complete the pattern at the neckline, and then you want to see the market provide the continuation to the upside by completing this impulse correction and impulse pattern to the upside. And in fact, that is exactly what the market did here. The market first completed the W formation at the neckline, so this previous resistance turns support, and currently the market is creating the continuation to the upside, possibly even printing here a higher high, so breaking above the previous high that the market has printed here. Now, in general, this is an impulse, and in the market, after an impulse, if you want to measure the correction, you have to use your Fibonacci by taking it from the low to the high of the impulse leg. And if we do that, we can see how the market here has retraced exactly to that zone, which is in between the 0.618 and 0.786 of the Fibonacci's taken on this monthly impulse, which basically create a very strong confluence of support area from which we did expect the market to provide this rejection to the upside. And in fact, that is exactly what the market did, and we can expect the market to provide even more continuation to the upside. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment the market is breaking above a quite strong resistance zone. In fact, from here the market started all this move to the downside. Again here, the market tested and rejected its zone to the downside, and currently we can see how the market has just created a very strong impulse to the upside, breaking above all the previous resistance that we had here. Because as you know, in the market, previous resistance, once it gets broken to the upside, is turned support. And in the same way, previous support, once it is broken to the downside, is turned resistance. Now also here, since we have an impulse, we can measure a potential correction by taking our Fibonacci from the low to the high of the impulse. And in this case, what we can see is that we have a 50% and 0.618 Fibonacci confluences lining up with this structure, creating a confluence of support here that we should see the market go and test before a potential continuation to the upside, basically to grab some liquidity at this zone by testing the demand that we have inside of here before the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what the non-commercials in the market are doing, we can see that lately net positions have been increasing. In fact, we went from having 28.9k net positions up to 32, 36, 41, 42, and currently 47.8k net positions. And we can see how with the last report, hedge funds have added 2.4k long positions on silver and closed 2.5k shorts. So silver is getting quite bullish, with currently 78k longs and 13.9k shorts. So we can expect continuation to the upside. Just a quick thing, for more educational breakdowns, make sure you subscribe to the channel and hit the bell. Going down on the daily, what do we see now here on the daily? I had spoken about silver a couple of times in the past. I spoke about it after the creation of this W formation, and I explained all the reasons for which from here we wanted to see first the market complete the pattern at the neckline and then create the continuation to the upside. And in fact, That is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. Now, at the moment, it's quite clear that the market has just broken above the previous high here also on the daily time frame, which is basically this previous resistance, which now that the market has broken it to the upside is turned support. And we should see the market go and retest this previous resistance turn support, which would be a quite good zone in which we can be looking for a buying opportunity, because we have already seen that net positions are clearly increasing and monthly, weekly already seem quite bullish. The only thing is that this correction could be a little bit deeper than this zone, because we have already seen that the weekly support is actually a little bit lower. But anyway, trading is not predictive. Trading is reactive. And the monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. But then we also have to wait for confirmations and entries on the intraday timeframes, so 4-hour and lower. And that is exactly what we will be doing here on silver with students. If the market will retest this structure with students, we will be monitoring price action from a 4-hour perspective and lower, instead of this area waiting for the market to shift from a 4-hour and lower bearish market as we will have to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding silver to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure you smash that like button and comment below. Also, you can go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. In fact, every day you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also get a daily Q&A session in which I answer all your questions. So it's a very complete program. I really suggest that you go and check it out. And I will see you in my next breakdown.